This is Justin Pulitzer. This is my midweek video for Wednesday, April 3rd, 2024. I'm filming this the 2nd at 10:21 p.m. So a lot's been going on. We got some selling to raise money to pay the tax man. We have the buyback blackouts. We just got through PCE, which was kind of I'd say maybe a little on the hot side, but Powell said within tolerable ranges. We got the jobs report this coming Friday, something else to worry about, of course, and a little bit of a pain trade mean reversion play. I've been saying oil's been quietly creeping up, more geopolitical risk. Dollar has not been cooperative, and now rates also not cooperative. Everyone seems to think we're just guaranteed these Fed rate cuts, but they seem a little reluctant, and with some ticks up in CPI and PPI, I've warned it could be one and done, or maybe two, and maybe none. We'll go through those numbers in a second. As far as sentiment goes, we saw a pretty big jump from the Fed decision, and even week over week. So the real story for me had been how many people moved to the sidelines, and they haven't fully recovered. But we did see some conversion here from sidelines and really almost directly from bears into bulls. So that's always a little concerning. You don't like to see big sentiment pops when you're near all-time highs. It usually can signal short-term tops. CNN, they've been much more bullish than us recently in pretty much every poll, but they're seeing a bit of a pullback that does not surprise me in the least. We are going to have the OPEC meeting, so we'll see if oil gets to break out or if it stalls here at the higher end of the range. We'll go through that chart momentarily. Also, the EIA petroleum status report, that's also market moving. A lot of oil. It's kind of oil Wednesday. And Powell is going to speak at 12:10. I'm expecting pretty much more of the same, but, you know, we got all these Fed heads speaking. And then the real big mover for me is going to be the jobs number on Friday. So if we're down enough into that, maybe we get a rebound. But if we kind of just muddle along, it does keep the risk on. Look, we just had a really big end of a year and big Q1, a little bit of sales and sideways action, consolidation, which is really all that's going on here. I mean, you listen to the media, you think the market's down 10 or 15%. I mean, it's just, you know, a couple of days off the all-time highs. The Fed gauge, they still seem to think they're going to cut in June. I guess I sort of have been of the opinion the Fed has given up fighting inflation a while ago, although they're not going to say that. They're going to continue to pay it lip service. But the real pivot in the Fed, remember, came when the Treasury couldn't fund itself with long-dated treasuries. They had to go to 3 and 6 month treasuries, and I think maybe 2-year tops. So I think that's the reason the Fed is at least pivoted, and we'll see about the rate cuts. Look, we're at 5.25 to 5.5 here, and a year out, we're just still over 5%. And to me, this looks very precariously at risk of breaking out. So just keep an eye. 1-year Treasury, 5% yield is it's attractive. The 2-year maybe a little less attractive, but close to maybe being attractive again. If this gets over 4.75, we could be on a quick push up to 5. You know, this is now the third test of this zone. So, yeah. 10-year also very at risk here, breaking over 4.35%. I mean, we're right there now. We'd probably go up immediately to 4.5. And my guess is the fear would be a move up to probably 4.75 to 5%. And if longer dated rates continue to rally, particularly the 10-year, that means mortgage rates goes up, car loan rates go up, PE multiple premium shrink because the 10-year is the de facto discount rate in discounted cash flow models. So 3-month and 6-month still look pretty good. They're pretty close. I usually have been favoring the 3 over the 6 because the 3 has been a little bit better, but 6 is prety close. I'm cool either one. And those auctions are every Monday, the 13 and the 16 week. If you're still on TOS, and if you're on if you're on Thinkorswim, it's still 13 and 26 months, and then on Schwab, it is of course 3 and 6 months. As far as VIX goes, let's just dive into these charts because we have a good amount of stuff to doing. But before we do that, I want to just, and I'll again reiterate this because I know people jump around, but I like to ask myself 3 questions. And these are they. What is the market trying to do? What is the market actually doing? And how good of a job is it doing it? Okay, just keep those things in mind when we look at all these charts. You might even want to write them down and keep them by the side of your computer. It's not a bad way to force yourself to remember to do these things. VIX getting a little rebound. That should be no surprise. We had talked about this, probably seeing some re-upping into the new quarter. To be expected, and frankly, thank God. I like to sell premium, and premium has been way, way, way too cheap to sell. Now, if we just fill up the pennant here from the falling wedge, that would be 1604. That kind of area has been some resistance. We have seen some moves into the 17s, but it's fleeting. We're still resisting at the key 1538 to 1556. If that level clears, maybe we do get a little bit of liftoff. I think the bears may still have a little bit of a foothold as long as they can keep the VIX over the 50 MA at 1379. I mean, that's sort of the short bus for difficulty level. But they need to hold the 50 and clear the 200, and we'll see how well of a job they do with either one of those. I would imagine that volatility won't come in until at least after the jobs report, though. So there's probably a few days of at least quote-unquote elevated volatility, if you consider 14s and 15s elevated volatility. TLT is teetering on, I don't want to say disaster, but triggering levels that the market will pay attention to. How does that sound? TLT visibility day. We're right on the 50% fib. We're right on 91.85 to 91.48. We did buy the dip, so there is that. If that breaks, we could test the top side of the old down channel and the new the new down channel. So that could take us down to 89s. Market won't like that. I know market people seem to be confused by this. The TV geniuses. Stocks like low rates. They don't like them too quickly because they think that there's recession coming. But in general, they don't like higher rates, particularly higher PE multiple stocks that need low rates for PE multiple premium expansion. And we'll see how the earnings picture plays out, which is coming up soon enough. I think this is going to be one volatile earnings season. And I think the forgiveness for bad guidance or misses is there's going to be none. I think you got a preview of that today with Philips Van Heusen, which is not a stock we talk about pretty often, but we'll talk about it today. Very simple. Bulls need to stay over 92s here. Anything below there, I think, could continue to pull back, and higher rates is not so good for the stock market. TNX also teetering on some disaster here. We are into the interim part of the channel. We are, however, above 43.33. We did get a topping tail, so that, I guess, is encouraging if you need stocks higher and you want rates lower. But I'm not comfortable with the 10-year until this is back below 43.33, and it would not surprise me to see a check back of the neckline at 44.84 and maybe even a real pain trade move back up to 46s. So bulls should not be, and I mean by bulls, I mean stock bulls, should not be complacent until this is back below 43.33 and at a minimum 43.48 to 43.54, but really the key proprietary level, which is defined by the 10/21/22 reference high at 43.33. Below there is good news for stocks. Above is not. XLF, we had talked about this getting over the reference high from 113.22 and saying that the channel high was a good opportunity to sell into. We're pulling back. Look, the pullback is right to the 10 MA. So what is it trying to do? It's pulling back. What is it actually doing? It is pulling back. So it's trying to pull back. It is pulling back. How good of a job is it doing pulling back? Kind of weak sauce. Just 10 MA in 2 days. Wake me up maybe when we get down to the 50 MA for maybe a bounce play. I mean, the 20 MA has been the key support. So if we lose the 10 MA at 41.62, I guess there's a quick short down to 41.18. See how that works? JP Morgan also scraping the sky here at the 2.618. I had said this is a good area to trim into, and I had to use a Andrew's pitchfork, which I don't think I've ever used on any of my videos ever, but there was no better way to draw it. So Sometimes the tools, just need to be expanded. I'm cool with that though. How, is this pulling back? What is it trying to do? It just looks like consolidation to me. How good of a job is it doing consolidating? It looks like it's doing a pretty good job consolidating. So, yeah, I again, 10 MA I think is a good stop here at 197.40. 20 MA has been the key support at 193.43, and if that were to break, we could come down to the 50 MA. Look, I still like booking some profits up here. Don't get me wrong with JPM. No complacency out of me. All right, the dollar is teetering on a breakout here, and it better give it up, and it has so far. We did see a very nice reversal intraday, actually a little bit of a dark cloud cover and a bit of a look above and fail, I guess, of the 105.01. We do not feel good about the dollar in Dixie terms, and this is mostly weighted against the euro until it's back below 104.636. If that happens, good things can come. We could see much lower dollar, probably 10 MA at the least at 104.372. And my guess is we would check back to the 50 MA at 103.817, which was a key breakout and breakdown level and could be checked back to. If this starts bleeping over 105.01 and we make it up to channel high at 105.27, stock bulls will not like this. The dollar bulls will. I re-rendered the range I kind of was using from here down to here. I didn't like it. I just was looking at it and I sort of was actually questioning what I was thinking when I drew it. But I used the 1.3 high and the reference low here from 12.28, and the 2 times range was 104.835. We did pull back. We retested the neckline. So I like this rendering. We actually looked in and failed. But if we can get over and stay over the 2 times range at 104.835 and really the 105.01, I think we could make a move up to 106's 106.138, and the market won't like that. I'm just telling you. This is the pass, don't pass line for tolerance for higher dollar without the market kind of losing its you-know-what. Bitcoin, it's now potentially a lower high, and we are below my key 69,355 to 70,195. We are holding the old reference highs before the new highs, which is comforting at 65,520. And I usually like to draw on a date here, which I seemingly don't have. So we're going to adjust that right now in real time. 414.21 reference high. 414.21 old high. Puts things into context. So usually there's responsive selling when you get back to old highs. Sometimes you overshoot them a little. It's not a textbook here where it's exact. But we now had a pullback to a somewhat higher low, but now we have a bit of a lower high and we are sort of breaking trend. Bit of a dubstep setup here. I think anything below 65,000 though can revisit 60-ish. So 61s to 60 and maybe even a 50 MA test down at 57s. I'd probably be an interested buyer down on channel low in the 50 MA, but I'd actually prefer the top side of the old green channel. Remember, when we break out of green channels and we're coming from new highs, the first test is a buy. Now, why am I still okay buying it? Because I always say don't do it after we made a lower high. Well, the simple reason, we didn't test back to it after the old high. So this technically counts as the first test from the new high. If we would have come down here and tested it and then rallied to the lower high, the second test I might do smaller size, but might not do it at all. The first test, though, for me is an interesting one. Now, the big question, and if you're a JP follower, you'll know what I'm thinking here. Is this now a fulcrum pivot? Because we have a lower high or 2 seemingly equal highs and a pivot in between. All right, so my answer to that is I'm very comfortable using the 3-5 low of 60,120 to 61,020 as the fulcrum pivot zone. Okay. Why am I saying zone? Because we have 2 reference lows there, and this is Bitcoin, and the difference between $100 in Bitcoin is nothing. So that zone to me is the key pivot zone. If we lose that, we could see a much larger pullback, maybe even to retest those 53,000s or 54,000s, wherever the channel high is at the moment. Hood. I've been a bull. I still think this could get eventually back up to 33s and 36s. But shorter term, I had said I was seeing some selling and I liked booking into the 20s. We did bounce very, very nicely off the 20 MA, and I am expecting a pretty good quarter out of them given the run in Bitcoin and all the meme stuff. But I do like using the 20 MA as a stop, 1804. Do not let it get below there. And I don't mind selling a little into pops. Just saying, that's what I'm doing. Coinbase, similar story as the hood, but pulling back, and this one is below the 20 MA. It did have a pretty decent candle today, but it is still below the 20 and the 10 MAs. So as long as we were below there, it's possible we pull back into the key zone here from 226.91 down to 208s and maybe even fill in the gap. I would probably buy the dip for a bounce somewhere around 187 to 178, right or right out, at least for a day trade, probably for a move back up to 208s to 216s. But we did break trend here, and we are below the key MAs, so I am leery. Could we rally back and do a similar pattern that we saw here in January of 20, what is this, January this year, 24. So yeah, it's very possible. We ride the 20 MA and then go lower. So yeah, it's got to get over the 20 MA, currently 245.84, and still going up, but cresting. So be a little careful. We've been bullish. I was fully on board once we broke out over the 193.18 level. We had talked about booking some profits at the 2 times range, but then we talked about re-entering once we cleared the 2 times range for the 2.618, and now we're at channel high. So very simple. Don't let it get below 208.40 on you. Anything below there, I think, pulls back to the 2 times range at 202.58 to the 20 MA at 201.75. And the top side of that channel is probably a right or right out buy, but I do like trimming some here. I'm long Newmont Mining. I bought this like almost perfectly. When we talked about this pro gap here, I bought it up over that high of day, and I haven't booked any of it actually. But I will if we lose the 50% fib and the 100 MA at, let's just say 36.12. We'll use the 50% fib. If we clear, I do think the real resistance, and I'll show you if you go back, there is historical precedent for this, to rally to the 200 MA. So that's a gap fill at 37.64. That's, of course, the 112 gap. And it's also the 61.8 zone at 37.70 to the 200 MA at 38.18. It's also a volume distribution zone. You can see there's a gap in that node. So my guess is that area will be some resistance. So probably a good opportunity to trim some gains if we get some poppage at or above the 200 MA. Once we get above the 200 MA and get below it, it often is a short. So just be careful. I don't know that we're not going to overshoot to the 40s to the 41s. It's really 40 to 41.13. That would be channel high. It's very possible that does happen. But I do like trimming into that 61.8 and the gap fill and 200 MA confluence. I often look for, I mean, does this get any better? A 61.8, a gap fill, and a 200 MA. I mean, if you're not trimming, you're not following my risk management discipline. So, and you don't have to, by the way, just because it works for me and I think, has historical precedent doesn't mean you have to follow it. Oil is into the must reject zone here. I don't really know a better way to phrase it. At 84.89 to 85.41. Anything over there does risk a move up to 89s, 89.18 to 89.85, and I don't think the market's going to like that too much. We are up to this 61.8 and a reference breakout zone, so it is possible we reject here, but we'll see what happens with OPEC and the EIA petroleum report. I don't usually love when things rally into those things because there tends to be a bit of a sell the news. There are probably going to be some OPEC cuts. I do think they want to keep the price high, and we are going into summer driving season. I told you back here that I was expecting it to break out, that I thought we would go higher. I needed to see it clear 79.29, but once it did, we kind of inched our way up, and we could just be in some consolidation up here. All right, moving along. XLE has been really bullish. New highs here, 96s. It's always it's hard to say it's bearish when you're making new highs, but we are getting stretched. We are above a 2.618. I probably would use 95.16 as a hard stop now, and I would think that if this gets up close to 100, there'll be some sellers. So the pain in tech or I guess some of the rotation has come out of tech into oil, as we had said it likely would. XBI broke trend. We kind of rode the underside of it, and now we're testing a very key zone from 90.91 to 92.02. If that fails, the 100 MA probably down to the 86 level, which was the 119 low, which fills up the triangle. So 86 to 87.35 would make some sense. If you want to play what shouldn't happen, it shouldn't get over the Tuesday high here. So anything over 92.18, I think probably gets up to the 93.75 level pretty fast. The 10 MA, 50 MA confluence, 93 is 93.51 to 93.75. Lily. This has been a pretty impressive stock, but we are a little below trend. We did make a little bit of a lower high. I think this is just a range trade. I think there is some risk down to the 50 MA and top side of magenta channel, 725.92 to 736.35. Bit of a dubstep trade here. Anything below 753.50 I think is a short. Anything that can clear there and get over the 10 MA at 771.52 probably goes back up to the higher end of the range, around 790s, 794s. UNH was not pretty today. Not pretty at all. This has been in a very large range for a while, and we got very close to the lower end of the range. They're not going to be able to raise prices as much as they expected. I'm not surprised. It's an election year, and older people tend to vote. Medicare D, you're going to really raise their prices right in an election year with inflation as high as it is? No, that clearly was not going to be on deck. I don't think either administration, frankly, if it was Trump or Biden, would have really allowed that. So, look, I call balls and strikes. So 431.36 to 445.68 has been kind of reference lows. UNA, this to me looks like a bit of a I don't want to say a reordering, but when we've seen these gap downs before, it's not led to good things. They're going to have to take down their guidance on their earnings call. So maybe wait for the next leg lower, or if they don't take down their guidance, then buy it. But this close to the earnings, I'm probably going to just play a little wait and see. Below 468.19 does remain vulnerable, so probably bounces is my guess. Everyone loves to buy this stock, but for me, I'm playing a little wait and see. Humana, this is a pretty bearish chart. It's real ugly. We had been not so thrilled about it. We had talked about it stalling at the time at the underside of the old wedge, and it's just been a mess since. We don't cover this stock very often, but we are getting kind of close to some levels where it's probably late in the game to short, and maybe looking for some kind of a bounce down here closer to the 78.6 at 285.94. Again, this one may have a little bit more on their earnings, but if it does keep coming down, it probably represents an opportunity maybe to sell some out of the money puts and see some kind of a rebound. I'd wait, though. On these, I'd wait for their earnings, or at least for earnings estimates to be lowered by analysts, because that has to happen. If they were expecting higher rates and they didn't get them, that's no bueno. So we held the 20 MA again, but we'll get to that in a minute. First and foremost, I had drawn in a Head and Shoulders. I think it was negated now. Not the fib extensions, because it's interesting. I guess the fib extensions. We could use some new ones now based on the dump of the last couple days. But there's a few things to note. One is that we made a new high in the after hours on a Friday in ES, and that markets don't tend to top on Fridays. They can short term, and they also don't tend to top in after hours. Granted, it was an end of quarter, so it's a little different than a usual one. But look where we rejected here, right at the 2.618. So 52.63.19. Look, I've told you anything below 5,300, don't be long, maybe be short, look for some pullback levels. We got just shy of the 2 times range from this Monday dump at 52.31. If we do the 2.618, that's basically 5,200. So that could be on deck. There's a smattering of levels here between 52.17s to 52.20s to 52.26s. we did technically have a little excess on the lows today, but I wouldn't say there were significant auction ending excess. I'd like a longer tail for that. So what now? I mean, a check back to 52.82 quarter would be a test of the new neckline, and that could be resistance now. I'm going to make that larger so we can see it on the screen. So 52.82 quarter to 5,300 is really new resistance. And you know what I say, when we're below 200 MA 30 minutes, it could become resistance. Probably at least on the first test. I would imagine it could clear at some point, but if we do test it and it lines up with one of these levels, it might be some resistance. Qs did not make a new high on Friday. It actually has been very weak. We finally got the 2.618, and we're hovering around there now. We actually overshot it at 18,299 quarter. So what could be resistance now is the 2 times range at 18,396. Remember, fib to fib, MA to MA. Maybe we get a push up to the 200 MA 30 minute at 18,472-ish and falling. And that would be the underside of an old up channel. And my guess is that would line up with the downtrend. Imagine we just open up into this like 18,450 half-ish or 18,414.75, wherever we wind up into this zone. It would be the downtrend and probably a good short, at least in the morning, if we have an up open. Remember, up opens tend to get sold in these type of markets. Down opens, as we saw today, there was a little follow on, but ultimately it rallied. It's very hard to be down this hard at the open and just keep going. A lot of the energy is used up. It's sort of like gapping up huge. Usually the market goes sideways to lower before maybe higher. And then in this instance, it would be sideways to higher before lower. I do believe that this, we have a new little bit of a mini neckline here at 18,414.75. So anything below there to me risks still lower prices. As far as SPY goes, not a disaster. The expected move is $5.57. The max pain pin this week is, oddly enough, 519 at the moment. I would imagine there could be some movement in that. I didn't want to give it in the weekend video because I thought we were at end of quarter, and I wanted to give it a few days to breathe. I didn't really think it was, I didn't think it was so relevant until we had a couple of days of the new quarter under our belts, but we do now, and I am comfortable starting to look at it. So the expected move into Friday's OPEX is $5.57. That number will go higher if the VIX goes higher, so just keep that in mind. We pulled back to the 2 times range on the 20 MA. The 20 MA is now held again. The more times we bang on the 20 MA, particularly if the frequency of the tests compresses, gets a little dicey, but when 20 MAs have held and we've cleared 10 MAs, good things have happened. So the bulls need to clear the 10 MA at 520.54. Pretty simple. I told you I thought we'd be in range. Look, we had a look above and fail. Now we technically have a look below and fail. So anything over 518.22 is still bullish. Below 518.22 gets... So let's keep it simple. Above 518.22 and above high of day at 518.98, I think does get the 520s and maybe fills the gap to 522.16. Okay? That's the the April Fool's Day gap. Anything below 518.22, we're cautious, neutral to bearish, and anything below low of day at 516.48, I think is more bearish for at least 514 and probably a move down to 508s and maybe the 50 MA, wherever that is at the time, currently 505 and rising. Remember, fib to fib, and then in this instance, MA to MA. So if we lose the 20 MA, we could retest the 50 MA. But if we hold the 20 MA and we hold over the 518.22, I do think we bounce. So very key spot here. Bulls did defend the close, and I just think there was some short covering into the end of the day because some of these pullbacks have lasted the length of a cigarette. DIA. $3.99, max pain pin $3.97 at the moment. We're going to keep an eye on this as the week develops. We are below the green channel. We did hold the 20 MA, and we did kind of hold a key support zone of 389.41 to 390.19. The 50 MA is just below at 388. So very simple. The bulls need to get back up over 392.84 and the 10 MA at 394.63. Anything that lingers inside of the Tuesday range to me gets more bearish, and below 390.28 I think does get the 50 MA and probably 384.92. Okay, so that would be the last range low. And when I say last range, it's defined from the 223 high down to the 3.5 low. Check out Boeing, still weak, below the 20 MA. I was really surprised on the CEO resigning news. I mean, you think he's leaving because there's good news for the quarter? Apparently people like to fly with their doors on, unless you're Tom Cruise in Mission Impossible. So the 50 MA and the 198.32 area is a breakdown level. I think if Boeing is lower into earnings, maybe it finally gets a washout. There's a trend line a little bit lower in the 160s. I'm going to wait for the quarter, but if it does break over the 50 MA on any news, that could get you up to the 200 MA very quickly at 211. They don't have a good news cycle. They need some better news about the planes. And, they did have that halt, and I don't imagine the quarter or the guidance are going to be that great. So this 3M really puzzled me. Also, they canned their CEO. It filled the gap on the news, and now it's back down. Why? Because they didn't can their CEO because things are going well. And I do worry that they're going to kitchen sink the quarter. So what now? We have a dub step. If you want to buy the dip, anything below 91.90 is a stop out. Anything over 94.42 probably gets you back up to the 200 MA at 99.100, and then it's probably a wait and see. I'd like to see what happens with 3M. I always worry when they bring in a new CEO that they're going to just kitchen sink the quarter, lower guidance, and the stock needs to have that final washout, so things are sort of reset. That's my thinking. I've done this for so long. I've seen this so many times. It doesn't always happen that way, but it usually does. IWM, expected move, $3.75. Max Pain pin 207.5. We stalled at the channel high. We're now mid-channel. I'd probably be a channel low buyer at 197.86. I mean, if rates keep going up and the economy weakens, these are going to be the first to get smacked up. But we're kind of back into the soup here, and we stalled at resistance. We're not down enough for me to really want to buy the dip here. I mean, at least the 50 MA, for Pete's sake, at 201.27. But if we did get over 205.88, you'd probably want to cover shorts because we could rally back up to 208s, 209s, and then you might want to put it out all over again. Qs, moving right along. A little below the 20 MA. Ooh, naughty, naughty. We've had a couple of days where this has happened, so I don't want to blow it out of proportion. But I will say this, if you zoom out a little bit, we are kind of below some key zones. I had told you anything below 446.58 to 448.64 to me was vulnerable, maybe for a retest of the 443.65 down to 432.74 and the 50 MA. So I will maintain that. And I'll tell you, if we lose low of day at 438.03, I think that's exactly where we go. And I think we go there rather quickly, maybe even an overshoot to the yellow channel low at 429.58, which then, are we broke fulcrum pivot zone, and are we going to fill the gap to the 221 gap fill at 425.61? Just very simple. If the bulls get it over the 20 MA, I'd feel much better about being long, and probably would get a test back to the 444.95.41 gap fill. So could we have had a little mini look below range and fail? Yeah, I mean, if we get over the 20 MA, if we get over 441.93, then I do think we get up to 444s. Not that, it's not rocket science here. $6.19. Max Pain pin is 443, so apparently they do think a little higher. SMH, that's always a harbinger of things to come, and one we're going to look at closely here. So I had hypothesized two things. One was this auction ending excess, and to me it looked like it did on 3.8. And then here, this was the resurgence on Micron. Is this a pro gap, and is it just consolidating for another move up? I mean, I don't really know the answer yet. So let's ask the questions. What is it trying to do? It seems to me like it's consolidating. What is it doing? It's consolidating, maybe pulling back a little bit, and then how good of a job is it doing it? I mean, this is still above the 20 MA and the 10 MA, so it's not doing that bad of a job. I would feel probably worse if we started losing 221.49, even low of day 222.38. I mean, that to me would get you down to 213.36, maybe the 50 MA. which would probably be a right or right out buy because it would be the new channel low. So the big question is, are we transitioning from bullish to bearish? And we're still above the green channel and we're still above the yellow channel. So to me, it's still undecided. If anything, this is to me just bull flagging. Micron still looks pretty bullish to me too. Dubstep here, if you're long 120.92 low of day is a good stop. That could even be a short, probably down to maybe even the 10 MA. I'd be a buyer on the top side of the old yellow channel. Why? Because we have a new high and we're coming down to the top side of a yellow channel, which to me is always a buy, at least on the first test. It could be down around 101s. I don't know if we're going to get there anytime soon, but still looks pretty good. I mean, we just made a new all-time high the prior day. So probably why SMH isn't looking too bad. NVDA also, another one. I mean, this is a little below the 20 MA for the first time since like my bar mitzvah, but, and do we have a lower high here? But I mean, is this really getting killed? To me, I'm sort of, it's possible we do get the pullback to the 50 MA. If this one does look a little vulnerable, I'll tell you, if they get over the 10 MA, the decline is probably over, 913.48. Anything below the 20 MA at 894.52, I do think risks a move down to 829.94 and maybe even the 50 MA at 782 and rising. But look where the 50 MA is. It's the top side of the channel and we're coming for new highs. That to me would probably be a right or right out buy. Again, this to me just really, if you take away this channel, and I'm going to just remove it for you for 1 second, what does this look like to you? To me, it just looks like consolidation at this point. All right. So just looks like consolidation. KL8C, not one we talk about a ton, but we are at confluence of 2 and 2.618 fib extensions. I'd trim some here. You have a little bit of a wedge forming. If this fails, we'll go right to the 50 MA and probably retest the 125 breakout at 658.78 to 664.92, which is the 50 MA, which is really the key support here. That's the top side of the green channel and roughly where the underside of the yellow channel is. Yeah, it just looks like consolidation and chop, but I'd trim a little here at these fib extensions. It makes some sense. All of these, frankly, all of these. SMCI, this broke down, got the underside of the channel, and is consolidating. It's got to hold this 976.10 to 1,354 level. And we're just kind of klutzing around in there. If that fails, we probably come down to the 50 MA at 850.55. It's just a little sell the news after the add to the S&P 500. This does look a little vulnerable, though, because it is below the channel. And we are kind of teetering on a key zone, but it didn't break down yet. And frankly, I thought it would be weaker sooner. ASML seems to be struggling at 1,000. I wrote this actually while it was struggling at 1,000. Actually got 1,022s. And pulled back. We never really retested the breakout at 895.93 to the 50 MA, which is now 934.73 and rising. We are below the 20 MA, but to me, again, this just looks like some chop and consolidation, and anything over 954.32 to me is just noise. Below there, I do think could pull back, but I do like using some up opens to trim into. We did break the megaphone, and it is possible we are transitioning from bullish to bearish. Remember, when we do transition, it's sort of gentle at first. And then it's all at once. If you ever read the book of Jaws, the opening scene where the girl gets eaten, there's just like a gentle lift of the water, and then it settles back down, and then she's food. So just, wait for that little gentle lift of the water and, maybe trim a little. Microsoft is pulling back, but it's not too bad. It is holding the 20 MA, and we did get a close over the 420.82. Anything over 420.82, I still think higher prices are in play. Anything below 415.32 could see more pullback, but the 50 MA is right here on the channel. 411.69 and rising, and that probably would be a buy the dip, at least right or right out. I don't know if we're transition. This doesn't really look like auction ending excess to me. It does look like a little bit of a look above and fail and chop, and probably some gentle profit taking here. But yeah, maybe a little vulnerable, but nothing too terrible just yet. Adobe, this does still look poopy. It couldn't even get, to the underside of the gap here at 528.01. I think this is just going to be dead money for a while until the next earnings. And frankly, the earnings, the pattern looks to me like it's might go lower. I probably think it's in range for a bit. Maybe we get down to the 442s to fill the gap from 6.8, 440, 63. That would probably be by the dip. We are just consolidating, but the rallies have been kind of weak. And really, if we lose 485, I'm going to put an alert here. We could have a look below and fail, but anything below 485, I think is at least a right or right out short. And if you want to do some kind of put spread or put ratio, I'm cool with that. Palo Alto, this was another one that got pancaked on numbers and couldn't really rally back to the old highs, but it did have a better rally than Adobe, that's for sure. It got a 50% fib. It got the 50 MA, which is now the must clear resistance. I'll tell you, if you want to try it right or right out here at a higher low off the 200 MA, anything over high of day of 275.56, that could work. Just don't hold on, sorry about that. Just don't not have a stop. You gotta use some kind of a stop there. What would I use? Probably the 200 MA, 271.38, because that was the thesis for being long. If that fails, we probably come back down to 256s and maybe down to 234s. So yeah, I had said I thought this would be dead money for a while, and I still kind of do. Tesla. So they disappointed in their deliveries. I told you them raising their prices probably saved the margins, but I think their volumes are down, and I don't know how great their quarter is going to be. If the deliveries were not so hot, the quarter is not going to be so hot. So there could be another gap down. These things sometimes tend to come in pairs. We now had 1, 2. I'll tell you, if they're weak enough into the number, I think you get a squeeze. But if they rally it into the number, not for me. So I think it's going to be a Costanza situation, but I don't think Tesla's quarter is going to be so good. Nike also, they had problems with China. This is now getting, though, close to some levels that do interest me. We had liked it, remember, over 99.47 over the last earnings high, and I actually liked it for earnings. I thought the sentiment was just too bad. But now things have changed. You now have 2 bad back-to-back earnings, so we need at least 1 or 2 to kind of get the ship right. Nike with an 8 handle or even a 7 handle? Yeah, that could interest me. I'd be interested in selling with a VIX pop. I'd be interested in selling some OTM footage in Nike. I can't even believe I'm saying this. Phillips Van Heusen, Calvin Klein, Tommy Hilfiger. I forget what other brands I don't really wear any of their brands, so whatever. I'm thinking 50% fib at 92.32. That was really the breakout. Maybe we eventually get there. Could be some consolidation here. Maybe the 200 MA. It's got to get over at least high of day here at 113.32. But I would be interested if we got down to 92s just for a bounce play. Maybe sell some out of the money 80 puts, which is the 61.8 and channel low. So at the breakout level. Maybe even, I'll tell you, if you want to do a cheaper trade, maybe buy 100, sell 80, 1 by 2. I don't know if that'll fill for very well. You probably won't get it on for a credit, but longer dated, that could work if you want to put a little something there. Restoration Hardware, this was a pop. I told you is basically a big range, and I thought anything below 338.61 was a short, and here enough, we're down below it. Maybe the 200 MA, 20 MA confluence becomes some support. That would interest me. I'd probably be a dip buyer if we got down to the 100 MA because it gave back basically all of the earnings pop. But yeah, I think this is honestly just an iron condor or strangle play, like wide. It's just a really big range. Like, check this out. Down here around 207s, and then anything over 338 has not been sustainable. So maybe it's a $200 range type of stock. I know it's crazy, but I think that's what's going on here. Amazon has been acting well for retail. They initially got smacked up on that news, but still kind of just consolidating, still above the 20 MA, still above the 10 MA, still above the 212, 175.39 high, still now seemingly above the 34, 180, 14 high. So Amazon still looks all right for the 188s or plus number, but I don't know, on a market correction it could get back down to the 50 MA. So if you want to buy 20 MA 177 and sell maybe 170 or 167, maybe $10 wide put spread as a hedge, I'm fine with that as well. Costco, this one looks a little iffy. Breaking trend here for the first time in a long time, below 50 MA, below the 20 MA, which was I had said back here was a potential short. I just dragged it over. So what now? I mean, 720 plus, maybe stop out. But if this keeps bleeding, there's room, maybe down to 666. We'll see. I'm not that bearish on it just yet, because to me, this could have the look below and fail here, mini, and it could just chop for a bit, but it is in a downtrend, and to me, this does look like it may be transitioning from bullish to bearish. And granted, yeah, it's one day, but it's not really just one day, because it's been consolidating in a bear flag, and it is testing low. So just be careful if you're long and it gets below 711.01. That to me would be not so good. Apple still acting also like it needs a diaper change. Is there a potential look below and fail here? Maybe. Was the rally very impressive today? Not really. They do have Worldwide Developer Conference coming up. They are close to the 165 reference support. I still think this gets 158s and maybe even down to 146s, but it is not so liked. I even heard Kramer the other day saying he thought it was going to go lower. Mr. Own It, don't trade it. So if he's turning bearish, I'm starting to maybe get a little excited about it. I still think that they really gave up the goat when they basically ceding their AI over to Google. I mean, this is a huge coup for Google. They're going to not only keep presumably keep their most favored browser status, in the Safari for the search engine, but now they're going to be the AI. I mean, numbers have to go up for Google. And this also sort of validates their AI. A bit of a dubstep here. If you're long, 152.15, low of day. I mean, really anything over 150, 155 to this 153.78 zone is fine. And I know a lot of people are talking about this. I think Ackman was posting about it. 160 would be channel high. But Google, nice reversal and closed almost near the high of days today. Meta also looks pretty good. It's just consolidating. Anything over 458.96 to me is fine. I would trim a little here, though, at the 20 MA. And if we did get up to the downtrend here at 507s, you might want to trim into. I don't know. To me, again, this just to me, like if I took this away, it just looks to me like a bull flag consolidation, maybe a bit of a lower high. But I don't know that we're not transitioning from bullish to bearish. And if we do, we could be down a bit. I'd definitely use for sure the low of day of 484.65 to 485.96 as a stop here. You don't want to see it below there. Netflix, little bit of a roll. It's got to clear the 10 MA at 620.52. Anything below there to me is a little vulnerable. Even bounces to there, I would probably trim a little into. Netflix doesn't have a bad chart, but if the market does roll, we could come back down to 596.15 to 585.80, which was a key breakout zone. Remember, it used to be 568.08 to 585.80, but then we upped it, so it's the 2 times range in the 78.6. Anything that holds there, though, is really still fine for the move back up to 700, but it really has got to hold there. Booking. Yeah. So we got back up to the tested into the gap, pulling back. I'll tell you, if we test into the gap again, then I'd start getting a little more interested, because usually the first one doesn't work and it's the second mouse that gets the cheese. If you're long here at 20 MA at 35.39.12 is a must hold, and anything over the 50 MA is probably more bullish than bearish at 35.82.18, but below there is a little iffy to me. And I had said I thought we would get mid-channel rally up to around here. We actually pulled back and exceeded it a bit, but I think you got to wait. And my guess is this is probably going to be, it might come back down and retest the breakout at 32.07.32 to 32.51.71. But to me, it just looks like it's in consolidation mode between this 36.98.30 to 33.98.97. And my guess is it chops around in this range for a while. Have a great rest of your week. I'll see you for the weekend video, late night Friday, early morning Saturday. Please like and retweet the video on Twitter. Cheers.